If you're new to mortgage note investing, probably your biggest hurdle is unfamiliarity. You're not sure what you're doing. Fortunately, you can join an investor capital call where you hear other real experienced mortgage note investors analyze the deal and discuss whether or not they like it. That's what we're going to discuss on today's show. All right, let's do this. Hello everybody, welcome back to another episode of Finance Agents Live. This is episode number 94, and today we're going to be answering everybody's questions about investing in mortgage notes. Last week, if you were on here, I talked about the process, the opportunity, what people can get from investing. And then over the last week, I've had lots of calls where I've been going over individual deals with individual investors, and the reality is, it's not super efficient use of my time or the investors. So what we're going to start doing is creating a weekly investor capital call where you can come on, assuming that you're an approved investor with us, and be a part of a group of people that discusses an opportunity. Now, this is especially beneficial if you are new to mortgage investing and you're not sure you know the questions to ask. So that's what we're going to be discovering today. If you are new to the show, welcome. Please subscribe. We love you. We'd love to see you around here more often. We'll be putting your name into the chat box like we did with Stan and Karash and let's see here, Rick, some of the people that have been around with us for years. Welcome back, guys. Okay, so 4 things we're going to talk about on this event. What exactly is a capital call? How do you join one? What happens on a capital call? We'll go into specifics on what's going to be covered and what you can do. And of course, when do they start so you can get going on it. But first of all, just to get into it, what is a capital call? Now, I'm talking to a lot of people that have never done mortgage note investing before. All right, now, a smart investor, if you're new to this, then you're probably cautious, and you should be, because if you haven't done something before, you don't want to gamble with the $100,000 that you spent so much time earning. When I first heard about mortgage note investing, I said this before, but I heard about this about 5 years ago, maybe 6 years ago now, from my sister. And I come from a pretty conservative family. My sister came to me and said, hey, I'm going to start investing in mortgage notes. Some guy named Sid. And I said, what the heck are you talking about? Who's this guy Sid? And what's a mortgage note? How do you invest in it? That doesn't sound safe. You're using retirement funds. What are you going to retire on if you lose everything? I mean, I immediately went dark on all the negative things that I could think of. Which is what you should do. When you're an investor, you got to look at the downside and make sure it's covered. But what she responded was, hey, it's new to me too, but my in-laws have been doing this for 20 years now. For 20 years, they've been investing and earning on average about 9% return on their investments. And I said, wow, okay, that's a really good investment. I don't care what you're in, to do something over 20 years. They'd never lost on a single deal. That was a real validator. So, my sister told me about it. She did it for a few years. And then a few years ago, I met David, who you might see on other shows, and he showed me everything about it. And I still watched it for 3 years, or 2.5 years, really. I mean, I did a small one before, but really before I started investing my own money into mortgage notes. So there is an example of cautious, right? I basically knew somebody who's now done it for 25 years. My sister's done it for 4 or 5 years before I got into it. I watched us do it for a few years, and then I started getting my feet wet. So I understand if you're new to this, it might take you some time before you're ready to invest. All right? But you don't necessarily have to wait 7 years. Think about how much money you lose by waiting as long as I did to get into it. So what's a shortcut way around it? A shortcut way is to get in a room with a bunch of experienced note investors, hear them analyze an opportunity. And as you listen, you're going to understand what experienced people can see. They're going to point out the problems, the flaws in a deal, and help you analyze it. That's what we're trying to put together for you. That way I'm not individually representing a deal. I don't want to unintentionally underrepresent the risk or maybe scare somebody. So what we're going to be doing is every week, initially it's going to be every Thursday at 4 p.m. Pacific, but it may change depending on availability. But a capital call is a weekly scheduled event. It's a forum to review current deals. Most likely, we're just going to highlight one opportunity per week because these things move really quickly. Remember, we're talking to people who want money. They're going through the borrowing process. They don't want to sit around a month for somebody to fund a loan. So we're going to have a focal point of a deal a week. You could choose to partially invest in it or invest in the whole note. and you're going to make that decision based on the information you hear in the capital call and the supporting documents that we're going to provide to you. And really, again, the key is you hear other people's opinions, right? We can't control this. We'll put the deal out there. We'll explain why we think it's a good opportunity. But we might have somebody on the call who says this is the worst deal they've ever seen. You're going to get to hear why, and then you can analyze if that's something that you care about. For example, probably one of the most common negative things I hear from a really experienced note investor is they say, you know what, this borrower looks like they can't support the payments. I want a fixed, consistent payment every month. And a lot of our borrowers, they're not able to demonstrate they can do fixed, regular payments. They may look like somebody who may default. When we lend on a loan, we're 50-50. We're comfortable if they make the payments or if they're not. And that's probably one of the things you got to be comfortable with us is we're going to be investing in people where they might default. Now, the good news is if they default, you end up making more money. It's not our target. It's not our intention. But we lend so that either way, we're happy. And as the investor, you'd be happy too. So that is a capital call. And I look forward to you joining us on our first one next week. How do you get in on one if you are thinking about doing mortgage investing? Well, easy enough. You go to notes.lendtoit.com, same link I had up last week. The link looks a little bit different now because I put our last week's video on there so you can watch it if you didn't see it last week. Go to notes.lendtoit.com, fill in your information. My assistant will contact you, schedule a time to talk to me. We'll go over it. I'll answer specific questions you might have at that time. Then you provide some information to us and a proof of funds so that we know you're an eligible investor. And then we will give you exclusive access to these events. These are not going to be on YouTube because we're going to be revealing private information about our borrowers, so we've got to make sure that you're a qualified investor with us and that it's not going out to the whole world. So once you go through that brief screening process, then you'll get weekly notifications and you can join on the call. For the call itself, you can choose to join live. That's really the way you should do it. Initially, that's going to be the only option for the first few weeks. We're trying to create a forum where you're going to be able to access the information after the fact, but that's not ready yet. So right now, you just join live, hear other people talk about it, ask questions you might have, because remember, if you have a question, somebody else might too. Even if you feel, I'm new to this, I don't want to look silly in front of the experienced note investors, it's the opposite of that. This is the time for you to ask questions. Selfishly, it avoids me having to answer the same question to 16 different people over a 5-day period. So please, if you have the question, somebody else has it, go ahead and speak up and we'll get it out there. Here is the page. If you didn't see it last week, this is how it looks now. Here's the page you go to. You go to the little Learn More section, put in your information. There's my email and phone number on there for you. But you'll put your own information there, obviously. Click Learn More. Boom, you're in the system. My assistant should call you within 24 hours of you filling out the form. And by the way, if you're watching this because you filled in the form and you haven't been contacted, we've had a lot of people coming in, just give us some time. You should be getting a call today, and I'm going to start doing these calls over the next couple days, and we'll go through the pre-screen process. Just basically some recap on what note investing is, make sure it's a fit for you, make sure you're an actual investor. We've had some people contacting us saying, hey, I want to do other stuff or I want a loan. This is not the forum for that. You want to go, we can still get you loans, obviously, but this is specifically for note investors, people looking to fund a loan either by yourself or with a group of people. All right, so what exactly happens? Let's do a little deep dive as to exactly what's going to happen. First of all, you log into the call, you'll get access. This will be exclusive access, so it'll be limited logins, be a specific login. You're not going to be able to share this with 20 people. It's just for you, anybody who is screened. You're going to log in. It's going to be a live call where, kind of like we used to do on our old webinars, we'll have the information in front of you. I'll pull up documents. We'll describe the opportunity, and then it goes into a live discussion where people can ask questions, and you can kind of gauge the interest of other people. Be able to view the documents that we reviewed, answer questions. If this is such a bad area, why would you be willing to lend in it? And often you'll be surprised by the answers because we do really dig into these opportunities before we present them to you. We don't just throw everything at the wall. So the available documents that we will typically review on a call, it would be, first of all, the loan summary. So just a one-sheet page that says the loan amount, the LTV, the borrower, the purpose of the loan, why they're looking for it, and what investment return you can expect to get when you invest in it. So you get the loan summary along with pictures of the property so you can get a real good picture of what you're looking at. We'll show you a recent appraisal because, don't take my word for the value. In fact, we don't really trust anybody. I mean, that's the whole point. Our job is to double check everything. So we'll always go out and get an appraisal. And sometimes even when we look at the appraisal, we won't feel comfortable. We'll go get separate broker price opinions or even multiple if we get weird answers. So we'll be talking to multiple people, and that information we'll share with you so you see what other licensed professionals say about the value of the property. Remember, our thing that we care about is we want to be lending at 50 to 60% of the value of the property. So determining that value is the number one most important thing for us. And that's the first thing we're going to demonstrate to you. All right, so you're going to get loan summary and pictures, recent appraisal. You'll see the title report, which is, and this is a question that I had with one of the investors I was talking to yesterday. When we do a loan, we're getting a title insurance. If you don't know what that is, we have an insurance company that will provide an insurance policy that says you are in first lien position on this loan. And that'll happen through the funding process. We'll show you the actual title policy, the preliminary title policy they provide to us. We'll show you anything that needs to be resolved through the funding process. For example, you have a loan we're funding right now that has a large judgment on there, about $25,000 judgment, and the investor actually wanted to confirm by talking to the escrow officer that when she funds the loan and the loan completes, that judgment will be resolved and we will be in first lien position. So we'll go over the title report and you can see what other things need to be paid off. You'll see the application of the borrower. You'll see borrower and guarantor information. Now when I say borrower and guarantor, something that we always do is the borrower is going to be a business entity like an LLC and the guarantor will be the person. So when I say the borrower, we're always talking about the business entity. Guarantor is the person. We'll tell you about the business entity and the person, maybe credit profile. And then finally, there's random stuff that comes up that's different on every deal. Like if it's a purchase, we'll show you a purchase sale agreement. If it's a rental and we have lease information, we can display those. If there's judgments or payoffs that need to happen, we'll show you the payoff information. That's pretty much everything. This is the stuff we're looking at in order to do a loan. You don't need to be a loan underwriter, and this may feel like more information than you need, but experienced note investors, these are the things they're looking at to determine if they like a deal. And so you can watch somebody and listen to somebody's reason why they may not like something. And then you can decide if you don't like it. Like if somebody says, hey, this looks like they might default, and you're thinking, I don't know, I don't care if they default, right? Then you don't worry about that one. But if they say, hey, I really don't believe in the value of that property, listen to their reasons, maybe that's something you would agree with, right? And then you can hear our responses and decide for yourself if it's something that you like. Okay, so that's what happens during the call. After the call, if the note is something you're interested in purchasing, escrow will already be open. So what we're doing is we're creating loan docs, we'll open escrow, funds go into escrow, and after everything is signed and perfect, it gets dispersed. By the time we do the capital call, escrow will be opened, and it's going to be basically first come, first serve. The first people to put their money into escrow are going to get the deal. Right now, I've had some people say, hey, that's not really fair. What if I tell you really like the deal, but I don't get the money in first? That's great. We've heard a lot of people say they like deals before, and then they fund it, or then they delay for 2 weeks. What we really care about is moving the process quickly and providing the benefit to the first person that comes in. Now, we do the call. It's going to be 4 o'clock Pacific, which is outside of banking hours. So it's possible multiple people could wire at the same time. If something like that happens, we'll figure it out. But basically, it's first come, first serve. The escrow officer will let us know who gets their money in first. If there are excess funds, if it's overfunded, which we expect to probably happen sometimes, we will either return the funds that last came in, or there's one other possibility, and I want to be real upfront with this. If it's a $100,000 note, and you are the first person to put in 20 grand, and the next person puts in 100 grand because they want to fund the whole note, we give priority to a full note purchaser. Again, selfishly, we could have 4 investors on a note or 1. Legally, it's just easier. Everything's easier with 1 note investor, and so we're going to give them priority. So if you put in 20 grand first and somebody else puts in 100, we're probably giving you back your 20 grand. We could potentially come to you and give you first right of refusal, but then it gets confusing. If you want the whole deal, just fund the whole deal. If you don't fully fund it, there's a possibility that your funds will be returned. Now, in case there's any worries at all about you thinking, hey, I'm sending this money into escrow, how do you know that Tim isn't running off to Bermuda with it. Well, I haven't been on here for 2 years talking about this, just to run off for Bermuda for one loan. But don't take my word for it. You can always talk to the escrow officer and confirm with him that if it doesn't go through for any reason, the funds will be returned directly to you. We're wide open book. Feel free to contact the escrow officer directly. If we're working with a smaller escrow office that's not one of the big ones that you would have heard of, then we'll also get something called a credit protection letter, CPL, referred to as a CPL, and that is a separate verification from a large established title company that they will do the escrow correctly and that it is insured in case something weird happens. So that's what the insurance is for, so you don't have to worry about those kind of things. And by the way, these are all things I would be worried about. When I've escrowed money, I'm nervous, right? That's my money. What's happening with it? I've gone out and gotten credit protection letters. By the way, when I give you a letter, you don't have to believe it. You get that credit protection letter, you can call the number on there. You're calling Fidelity Title or First American or whoever it is, and you can confirm with them that it's a real credit protection letter and you are safe. So any way you need to be protected, we're an open book. You can go straight to the professionals and verify it. So that's what happens after the call. Let's say you were the one to fund the note. So immediately after the funding happens, and we're going to be drawing loan docs, so you'll be able to see it in advance. Immediately after the funding happens in our name. It'll be a lend-to-it funded loan, and then immediately afterwards we do an assignment. So when we fund it, it's technically funded by Lend-to-it, LLC, its successors and or assigns. What that means is we can assign it to you and you get the full rights and benefits, everything that comes along with owning that note. Why do we do it that way? Why don't we just fund it under your name? Well, frankly, you're not a lender, probably. Maybe you are, but most likely you're not, or we don't want to be restricted to only working with lenders. So that allows us to do what we do and then assign the mortgage to you. That way, if any borrower ever complains for any reason about the lending process, say, hey, this guy did something wrong, who knows what it is, they're going to be coming after us, they're not coming after you. So it creates a protection between you and the actual funding process because, there's different laws in every state, and you don't want to be staying awake at night wondering, hey, was this loan legal? There's a lot of ways we secure against that. All the loan docs are created by a law firm. But again, you don't have to trust us because it's funded in our name. And if there's a problem, it's our problem. You are simply the beneficiary of all the benefits of the mortgage. All right, so after the funding, it's assigned to you. And you should expect your first payment typically around 60 days after funding occurs. Let me explain why 60 days, just so you know. So let's say right now it is June 5th. If somebody signed a loan today and it funded today, then their first payment is not going to be July 1st, it's going to be August 1st. Because whatever month you're in, that's a partial month, and that partial interest will be held at funding. And then the first full month's interest is due at the end of that month. So whatever month you're in, you got a whole month to go, and then they make their first payment. If they make their first payment August 1st, then you're typically going to get your money back 10 days after that. So long story short, assume you're going to get your first payment within about 60 days of when the funding occurs. That assumes we didn't hold 6 months payment or anything in advance. Most of the time we're not going to. That's when you should expect to get your first payment. That is after the funding occurs. All right, so when do they start? Yeah, I think I said this earlier, but here it is again. First call is next Thursday, June 13th. So if you're interested in joining that call, please contact us in advance because we need a chance to talk to you, get your information, get your proof of funds before the call. If you don't have that in, then you're going to miss that one, and you're going to miss that loan. It's our expectation. We're fairly confident that there's going to be, at least for now, we're just starting with one deal a week, and that should be fully funded by the time the next call comes around. And some of these are great. In fact, some of the deals, we already have people that are interested in buying them. So these are going to move quickly. We're not going to come with 20 and say, here, what do you want? Because it's just too much to look at. Anytime there's a deal, you can choose to put as little as, probably the minimum is probably 10 grand per deal. If it's a larger deal, we might make the minimum 25. But each one's going to be a little bit different because we have loans that are as low as 85,000. That's one we're funding right now, up to $3 million that we're going to put out for the investors. So that's the first call, Thursday, June 13th. If you're interested in earning 15% on your money, then you need to get on that call, and then you can decide if it's something you're interested. Again, go to notes.lendtoit.com, and then you could talk to me instead of just watching me up here talking. You can talk to me instead of just watching me talk. Hear me talk to other people. You've never done that before, right? Okay, so that's it. I don't know if anybody had any questions. I'd love to answer any questions about note investing in general or about the deals that we're going through. If you've been on the show for a while, then one thing you may be thinking is, hey, I watch you do these shows where you're talking about doing loans that nobody else will do. So as a person, offering loans to people, that's exciting to me. As an investor, that makes me nervous, right? How do you make that balance? And again, I just want to let you know that there's a lot of different things. Lending is an art and a science at the same time, and we're definitely heavy on the science, but there's also preference. And so with our thing, what we care about, and this is based on David's 32 years of experience, so it's not based on my hunch or whim from last week, what we care about more than anything else is the value of the property and making sure we're in at 50 to 60% of that value. So the things we care about the most are, do we really have the value right? And we were, wide open for discussion on that. Like, for example, a deal we were looking at the other day, the house was valued at $145,000. And if you look around it, a lot of the houses around it are worth $100,000. The investor's saying, hey, what the heck? Why is this worth so much more? Well, if you pull back a little bit, which is what the appraiser did, you'll see some houses are selling for as little as $30,000, but some selling for as high as $600,000. After talking to some realtors, we saw that the area was going through gentrification and the values were increasing. So that's potentially a good area to invest in. Plus, the particular property is a duplex. So it's 2-for-1, fully leased out. You got 2 tenants in there, been paying, and the payments are going to far exceed the loan payments in a month. So it's a good deal, even if it slightly exceeds the other properties around it. So that's an example of the kind of thing that we want to be talking about in order to get loans going. All right, I don't see any questions coming in. So with that, we'll go ahead and wrap it up for the day. Thanks, everybody, for coming onto the call. We hope to see you on the weekly capital call. Feel free to email me directly. If you say 4 o'clock, man, that's like the worst time ever. Okay, that's cool. We're open for input. Let me know, and we can always try something else out. Next Thursday will be at 4 because we've already got people lined up for that. But we're always open to feedback. Maybe we do multiple ones or whatever. All right, that's it. Thanks for coming on the show, and we look forward to doing a lot of deals together.